This video is for you if you think that electric cars have a bright future for sustainable transportation. Even after a recent decline in the stock market, a well-known Tesla analyst and shareholder is still upbeat about the company's future. This man shares the opinions of many of us Tesla stockholders who believe that tech god Elon Musk has the capacity to permanently change transportation and sustainability. Come along as we discuss James Stephenson's observations and the reasons he believes Tesla's stock will rise. Fasten your seatbelts and get ready to be amazed by the EV's industry's prospects for expansion and financial success. Please hit the like and subscribe buttons before we go there. Why do you think the price of Tesla shares will soar? There are still a lot of bulls in Tesla, even if the stock has fluctuated greatly over the past year. This should not be missed by everyone who is still excited about the future of the leading electric vehicle manufacturer in the market. James Stephenson, a well-known Tesla analyst and shareholder who is also active on Twitter, posted a lengthy thread on January 16th expressing his optimistic assessment for test line 2023. According to Stephenson, naysayees might believe that Tesla's recent significant price reductions will eliminate any possibility of profit growth for the business in 2023. Even though I hate to admit it, 2023 earnings and reported deliveries are still being received. Then, in response to the Twitter thread, he sent out a series of tweets outlining his position and providing figures. He claimed that because Tesla was slowing down delivery, Q3 and Q4 deliveries fell short of analyst forecasts. Deliveries of Tesla vehicles will undoubtedly break quarterly records thanks to the latest price reductions. In a follow-up tweet, Stephenson states that the Tesla Model 3 and Model E are the best-selling luxury cars in the world, and that sales of the former are increasing, though not as quickly as those of the latter. This will enable weekly production of Tesla vehicles to surpass 3,000 at the company's two recently opened factories by the end of 2022. The Austin and Berlin plants have significantly increased production since they started operating capacity from the middle of 2022 through 2023 as shipping and inventory levels continue to rise and the average cost per car delivered rises, according to a graphic Stephenson provided that shows production and delivery data related to the aforementioned chart. Stephenson stated that analysts for Tesla predict that production would exceed deliveries. When it comes to conference profitability, investors should prioritize profit growth above all else. Elon Musk, the CEO of Tesla, projected that by the end of 2023, approved cars would be able to use the test's full autonomous capabilities. According to Martin Vicker, head of investor relations at Tesla, the business is on schedule to deliver supervised FSD in line with Musk's anticipated timeline. According to Vicker, my prediction is that Tesla will increase profits over the next several years by persuading more customers to pay a premium for fully autonomous vehicles in the near future. Supervised FSD, also known as supervised autonomy, refers to a situation in which the driver maintains a significant level of control over the vehicle's movement while assuming a mainly passive role. Tesla introduces to the public fully autonomous driving technology. Drivers must remain alert and follow safe driving practices no matter how close the end of the year approaches. This includes refraining from abusing their advanced driver assistance systems, as demonstrated by FSD beta program participants. According to Vita, users who use FSD while driving will not be allowed to use the service at all. We firmly believe that as Tesla collects more data through interventions, it will continue to enhance its self-driving technology. In other words, the company will gain valuable insights from drivers who actively correct fully autonomous maneuvers. We are taking this road because we think that the issue of universal autonomy can only be resolved by large-scale data collection and artificial intelligence. I predict that Tesla Energy will experience significant revenue increase for the Megapack XL when the new factory ramps up in 2023 and incentives start to apply, as Vicker stated in yet another chart in Stephenson's previously cited Twitter thread. In 2022, the Tesla Energy business has made notable success in spite of economic difficulties. Based on the Q3 results call from Tesla October, each unit has the capacity to store more than 3 megawatt-hours of energy, which is sufficient to power 3,600 houses on average for 1 hour. Stephenson expects The Tesla Megapack, which safely and dependably stores electricity for the grid to generate significant revenue growth. This eliminates the need for gas peaker plants and helps prevent outages. Tesla's CEO Elon Musk recently said that the business anticipates a 150-200 annual growth in stationary energy storage, which is far faster than the vehicle industry. Installing solar panels, solar roofs, and stationary energy storage devices like Powerwalls and Megapacks are among Tesla Energy's specialties. The company reported in its shareholder letter that the deployment of energy storage reached a new quarterly high of 2.1 gigawatts last quarter. Tesla said that in Q3, its energy storage deployments reached a record-breaking 2.1 gigawatt hours, up 62% year over year. This gain achieved in spite of the fact that their energy sector continues to be more affected by semiconductor problems than their automotive business, and in spite of the fact that demand for their storage goods continues to exceed their supply. According to Stevenson, while earnings per delivery growth will be slowed by Tesla's deliberate price cuts in 2023, earning dollars will still increase as a result of higher deliveries. He also explained why the earnings per delivery in Berlin and Austin plants are increasing rather than decreasing, resulting in lower expenses per delivery and the highest cost per car in Fremont, which is contributing less and less to the global mix. It gets harder to deliver every vehicle before the end of each quarter the more vehicles you produce each week. Stevenson demonstrated how, despite a decline in revenue per vehicle in 2021 and 2022, the wave's collapse affected Tesla's quarterly finished products inventories. According to Stevenson, Tesla's automotive gross margin improved after regulatory credits were taken out. He projects that revenue will increase until 2023, even though Q4 will see a decline. The Tesla analysts provided a more thorough chart that illustrates the company's revenue growth over time. As of Q4 2019, revenue reached an all-time high of over $25 billion for the entire year. He wrote that, while some Tesla believers argue that the company's operating expense figures are overblown due to a lack of increase, the main cause of this is the CEO's stock payout. He said in a subsequent tweet that Elon Musk's 2012 stock compensation exercise resulted in a special payroll tax of $340 million for the fourth quarter of 2021. More graphics that support Stevenson's prediction in a more thorough sequence of depictions of Tesla's deliveries, revenues, and earnings following its worst ever year are included in the tweet thread. According to a number of analysts, Tesla stock is the greatest investment for 2023. Benjamin Callaway, an equity expert, lowered his projected price of Tesla shares from $316 to $252. Kilo then positioned Tesla as the best concept stock for 2023 before 6 analysts lowered their price predictions. Analysts have nevertheless kept buy-in outperform recommendations on Tesla stock, and their targets are still significantly higher than the stock's current price. According to Carlo, investors shouldn't be overly concerned about weak demand in the first part of 2023. The expert claims that Tesla has several options to increase consumer demand for its goods. Tesla is well positioned to benefit from the increasing market share of electric vehicles through rental agreements and accelerated bonuses. The longtime artist and Tesla stock advocate Dan Ives, a financial analyst, is now joined by Market Bard in their optimism on electric vehicles. Strong analysts have suggested that Elon Musk's use of Twitter to discuss politics and interact with people all walks of life is hurting Tesla investors. According to a soap opera in the fiasco, Tesla's bull has recently and again expressed dissatisfaction over Musk's Twitter excavated hat. Last week, Ives reduced his price objective for Tesla stock from $250 to $175 while keeping his outperform rating the same. It would be simple for us bulls to give up now and see the two short-term obstacles as obstacles that must be overcome before the stock can continue to rise in 2023. But Ives is hopeful, and the analyst concluded that the company has, in our opinion, bottomed and is working from here as long as enthusiasm returns. He stops selling Tesla's stock and turns his attention to the company. Although Ives hasn't said it explicitly, the street will closely examine any other strategic blunders made by Musk in order to further harm shares. This is because over 70 of the recent sell-off in I Tesla stock can be attributed to the response to Musk on Twitter. He continued by saying that it is still too early in the year to make any significant projections, so Tesla's stock is still something to watch. We strongly advise you to subscribe to our channel in order to receive updates on the price of Tesla stock. If you enjoy this video, please hit the like button. I'll see you in the next one.